let's start, Melissa, with you about just what the takeaways, the key ones for you from Meta Platforms, because it was a lot better than the reaction that we saw from the likes of Alphabet and others.
Indeed. Thank you. It was certainly an interesting quarter. It was a solid one as well. I think we saw both, slight beats on both the revenue line and the operating profit line. In terms of the CapEx actually came in a little bit lower than initial expectations by S&P Global Visible Alpha consensus. And then looking forward, that CapEx is going to remain within the range that they had initially given, but at the higher end of it. So they didn't increase CapEx significantly for the rest of the year. I think the CapEx spend will come next year, but I think the way that the CFO described it is that it will remain disciplined and in line with how sales growth is trending. So I think net that was a positive.
Sarah, what was the biggest difference in your mind between what was said from Meta Platforms and Mark Zuckerberg about their future plans, AI trajectory and whatnot, with what we heard from Sundar Pichai and Alphabet, given what they are going to do with AI, the spending that they're going to make, what they have to do with it? Why the dichotomy? Why the difference in reaction?
I mean, those are very different companies, right? And you have to remember that none of these companies are particularly new to AI, but Alphabet in particular has been in this space for so long. They bought DeepMind, they wrote the original white paper that's driven a lot of this sort of Gen AI craze. And so, it's not surprising to me that there's a difference there. The thing that was interesting to me is that we know that Mark Zuckerberg likes to spend money. We all remember the legless metaverse days, but the reality is that when the street likes what he's buying, they're much more generous about it than with things like the metaverse, where they just didn't believe him. And we saw that in the stock price.
Here we have the 2-hour price chart for Meta Platforms Incorporated, stock ticker META. So as we can see here, this is a stock that has once again very much surprised the market and traded in a whipsaw fashion over the last few weeks. Prior earnings number was quite positive from the company. There's no doubt about that. We have seen a positive upward surge in price momentum since that happened. However, the reversal from here has also been quite as forceful. So there is a whipsaw trading action here that has probably caught a large percentage of trading investors by surprise. In this video, we will be closing out with some specific price levels that can be used to identify trading positions here going forward. Most recently, we can see near-term highs come in at 527.13, which marks the price high from August 1st, 2024. However, then this followed with a severe sell-off in the stock. We can see this in the trading volumes as well. And the sell-off that resulted was quite massive in size. Here we can see that the ultimate price lows that came during this whipsaw price movement posted at $483. And we have since stabilized from that point. However, we're once again starting to roll over here after prices have hit another resistance zone at roughly 502.50. So there are real questions here about the main trend trajectory that's likely to establish itself going forward. If we pull out a bit here, we can see that the stock is actually trading with some higher highs and higher lows throughout this trading period. In addition to this, the indicator reading is also bullish, which does support the balance of the evidence and tips things in the favor of the bullish side of the market. When we look at these prior price highs, which posted at the all-time high during the first half of the July 2024 trading period, we can see that this price high breached the prior price high, which came in during the April 2024 trading period, the early parts of April. Even though we saw significant price movements lower here, this ultimate price low did come in at just 442. And this does break above April 25th lows, which came in at 421. So overall here, we can see that we're actually forming a bit of an uptrend channel here. Which looks fairly stable in nature. As long as this uptrend movement here remains intact, the bias does remain positive more than negative. All of that said, this is a very volatile stock that has shown some highly erratic price action over the last several weeks. For these reasons, it makes sense for traders to avoid establishing large positions in this stock near term. because the level of unpredictability that has been associated with this name over the last month has been extreme and has caught many traders off guard. If we're looking for specific price lows to start to enter into positions, the first price level that I would be watching comes in at roughly 472. If we drill in here a bit, we can see that this was the price low, which was generated during the August 5th trading session. And this price low was established after the stock managed to recover from these prior lows, which came in at roughly 450. As long as we're able to maintain support in this area, I do expect the stock to continue to move higher and ultimately retest these prior price highs, which come in at roughly 527. As we can see on this price chart, prior highs at 527 did break above the 78.6% Fibonacci retracement, which came in at roughly 522. Unfortunately, we did not see a price close above this level either on a daily or on a weekly basis. So this does suggest that there is a possibility here that what we ultimately saw was a false breakout. This assumption is exacerbated by the fact that the following declines here were quite massive. The only thing that would keep me from suggesting that this was a false breakout to the top side would be the fact that we also saw significant price rallies from these lows. If we're looking at the stock from a fundamental perspective, we do need to keep in mind the fact that the company did post strong earnings during its most recent quarterly earnings report. Obviously, there are potential issues with Meta Platforms and its plans to focus most of its spending on AI research. We haven't really seen much upside in the stock based on those types of plans. For the most part, the market has rejected those ideas and suggested that this additional spending needs to show results before we start to see positive movements in share price action. However, the stability of the company's most recent earnings report does suggest that Meta Platforms does remain on a fairly strong footing, and this does suggest that dips from here could be somewhat limited. With all of that in mind, we do need to remember the fact that this stock has seen a tremendous amount of volatility over the last month. Some of these moves have been very unpredictable in nature. We can see that in the fact that two-way price action has unfolded during very short periods of time. For these reasons, I would continue to exercise caution when trading this name. But overall, the fundamental outlook does remain positive, and we are continuing to see support zones develop roughly around $450. As long as this price zone to the downside remains intact, I would expect the stock to see upside price movements that ultimately result in a retest to these prior all-time highs, which come in right around the $540 level. Here's the current market analysis for Meta Platforms, stock ticker META. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.